Hello friends and welcome to Sarat Chandra IAS Academy where your dreams are our mission. This is Yatharth here and today we'll be discussing very important concepts of economy which appeared in Prelims 2023 as a set of continuous questions. So these concepts were very important for us to know and they will serve a good purpose if we study about them right now in your next exam, that is 2024. So the concepts that we are going to talk about are foreign investments, stability, shocks, open market operations, what are assets, bonds, capitals, and so on. So let us start one by one by addressing the questions first. So the first question that we are going to talk about asked us about the concept of sterilization. Sterilization often means to sterilize something. And to sterilize means to reduce or negate its properties. Alright. So we'll be talking about this, what is sterilization. We'll also be seeing that what is its relation to the open market operations, oversight on payment systems, etc., and which of the options is correct. Alright, in the next question, we'll be talking about different things such as government bond markets, call money market, treasury bill markets, stock market, and we'll see what are capital markets and money markets. Alright, in the next question that we'll be dealing with, we'll see how economy questions can be asked from newspapers. And what is this small farmer, a large field technique? Or this small farmer, large field technique. And how is this a technique when the farmer is small and field is large? All right. In the next question, we'll continue with the MSP, minimum support price. We'll know what is it and for which crops it is used or applied or offered by the government. So we'll solve the question along with. Okay. In the next question, we'll be reading about the assets and their types. Assets and their types. What are tangible assets? What are intangible assets? And what is the difference between assets and liabilities? Okay. In the last question, we'll be talking about the Finance Commission. The 15th Finance Commission. The constitutional background behind it, the articles involved, and we'll finally solve the question as well. Alright, so now let's move to the first question. The question asked us about the sterilization. So I'll explain the process to you in a lucid manner. So let's say this is a foreign currency. You can consider it US dollars. Alright, and this is a foreign investor. Now this foreign investor has foreign currency. This foreign investor sees that the market in India is growing. Okay, there is a growth. Or there is a possibility of growth in the Indian market. Now this market can be either the stock market, let's say, or any company. Based upon that, these foreign investors invest some money in India in the form of either, let's say, FDI or FPI or FIP, whatever. Alright, so these are the type of investments, foreign investments. Okay, so now in exchange of this investment, this company will sell its stock to this person or this institution, whoever it is. That means in Indian economy now, this institution will get some USD. Okay, whatever this is, let's say it's a company or a person. It has US dollar investment. Now, in order to capitalize this investment, this USD, this person will go to the forex market or a commercial bank, let's say. It will give this bank this US dollar. In exchange of this, it will get some money. This money it will capitalize, he will capitalize. All right. Moving further, so this person gave USD to the bank or the forex market, got money out of it. Money means Indian rupee, let's say domestic currency. All right. Now this bank will go to the RBI and will give its dollars, USD, to the RBI and get money in exchange of this so that it can keep on its operations. It may as well keep some USD with it. All right, that's its decision. Now the prime concern for RBI is that there has been an increment in the number of USD in the Indian market. And at the same time, in the market, in the money supply, let's say, there has been an increment in the rupee because the people got rupee in exchange of the USD that RBI got. Okay, so this increased rupee can have various effects. So what effects can this have? Increased rupee. It can have two types of effect. One, that people have more rupees, there is more money supply. That means there can be inflation. If people have more money, then they are willing to spend more money on the same thing. Okay, that can lead to inflation. On the other hand, having let's say more forex can make the rupees stronger. Now a strong rupee would affect exports, and in the same limit, let's say, it will also affect imports. So basically what would RBI want here is that these rupee fluctuation, both the strength and the amount. Strength means basically relative price. And the amount of rupee in economy, that means liquidity, should be controlled, should remain controlled. Now in order, okay, what is the one more concern of RBI here? The one more concern of RBI here is that rupee increased in economy, but nothing actually got sold. There was just a stock sold. Any tangible asset did not get sold. All right. So that means that rupee wastefully only came to market. So what will RBI do? RBI will, let's say, move its own stock in the market. What is RBI's stock called? Bond. So it will sell some bond to somebody in the market and absorb some rupees from here, from the same market. It will absorb some rupees from this market back to the RBI. So that means it will control the liquidity or the money supply basically. So this will sterilize the effect of increased rupee because of external shock. So this is what's known as sterilization. All right. So what will be the answer here in our question? Okay. So which of the following activities of RBI is considered to be part of sterilization? Okay, so let's see one by one. So regulating the functions of non-banking financial institutions, no. Debt and cash management for the central and state governments, no. Oversight of settlements and payment systems, no. Conducting open market operations, selling bonds, yes. Okay, so the answer will be A. Okay, now let's move read the theory about this. Okay, so sterilization by we'll deal this topic in three terms, three manners: easy, medium, and hard. So sterilization by RBI is like adjusting the flow of money basically in the economy to keep things steady. When the RBI buys foreign currencies, it puts more money into the system, which can cause problem like inflation. To prevent this, RBI takes some of that extra money back by selling government bonds. It's like balancing act to make sure the economy stays healthy and doesn't have too much money floating around. That means too much of liquidity. Okay, so this is the answer to our first question. Let's see more details. So it's a monetary policy tool. Okay, these can be asked in the questions and may cause some confusion. By the RBI to control the money supply. When the RBI wants to manage inflation or stabilize the exchange rate, it may intervene in the foreign exchange market or buying or selling foreign currencies. Okay, one more thing I will explain here. So how exchange rate affects the economy, let's say. So this is 1 USD and this is equal to, let's say, 100 rupees. Okay, now let's say the rupees become stronger. That means 1 USD is now equal to, assume 80 rupees. That means if somebody is exporting something from India, all right, it's, let's say, exporting here or to Americas or Europe, and it's getting dollars in exchange. Now it comes back to India, converts into rupees, and initially he was getting 100 rupees, now he's getting 80 rupees. So he becomes sad. Okay, so it's bad for the exporters. It will decrease the competition, export competition. Okay. In another cause, let's say 1 USD becomes to 120 rupees. That means rupees become weaker. Now, let's say somebody was importing something. It was bringing something into India. So it was basically giving people dollar. Okay. And now in Indian currency, it has to give 120 rupees now to get $1. Earlier it was getting $1 in 100 rupees. So when rupee becomes weaker, the importers become sad. Okay. So what do we want? We want rupee to be stable. Let's say this is the limit where exporters become sad. This is the limit where importers become sad. We want to keep both happy. So we'll keep the rupee in here by managing its supply. So it should not get too strong. It should not get too weak. Okay, it also depends upon how much is the supply of rupee in the economy, what is the demand of USD, what is the bank rate or interest rate by global banks. So basically economic questions in prelims are all about this only, the money supply. Sometimes they may ask you about the government bond markets, capital markets, okay, stock markets, equity. Sometimes they will ask about the global causes of inflation, recession, and how to, let's say, how to control the money supply. So all of the questions in prelims from economy are from money supply basically. Some are from here and there, but mostly from money supply. All right. Okay. So let's see the detailed analysis of this. So sterilization is a monetary action. Remember these terms used by the central banks to offset, because these things will help you in the mains answer writing. Concept clarity is important. So offset the effect of inflows and outflows of capital on the money supply. Also, please remember these things. In India, the RBI conducts open market operations to sterilize the impact of capital inflows. Okay. OMOs involve the buying and selling of government securities in the open market. When the RBI buys government securities, it injects liquidity into the economy. Okay. Okay, I'll explain this thing also. So RBI has this, let's say, government bonds. So bonds are basically a promise. What is bond? That you give us this money, you give us 100 rupees. In a certain time, at a certain rate, we'll give you back, let's say, 107 rupees. If there's 7% interest and 1 year of time, then we'll give you 107 rupees in return. So bond is nothing, just a paper. But a paper has a promise backed by the central government or central bank. That's why it's trustable. Okay. So when the RBI wants to absorb money from the market, and the RBI wants to absorb money from the market, it will sell some bonds. People will give it money, and the money will come to RBI, and bond will sell. When the RBI want to inject money, on the other hand, then it will buy bonds. When it buys bonds, it gives money to people, money back to people. Okay, this all depends upon what is the interest rate. If interest rate is very low, then people will not sell the bonds or buy the bonds, sorry. Okay, so it all depends upon the interest rate. So this is all economy, this is a part of the running economy that we must know. Okay. So where were we? Detailed, all right. So when the RBI sells government securities, it withdraws liquidity from the economy. The RBI also uses other tools to sterilize the impact of capital inflow, such as CRR, cash reserve ratio. So this all I already told you in the last lecture, the SLR, CRR. So how much cash the banks are supposed to keep with the RBI, or how much is SLR. The CRR is the percentage of deposit banks are required to hold with the RBI. SLR is the percentage of deposit that banks are required to invest in government securities. Okay, so it will keep changing the SLR and CRR also. By increasing the CRR or the SLR, the RBI can withdraw liquidity from the economy. The RBI's sterilization operations are aimed at maintaining price stability and financial stability. So by sterilization, the impact of capital inflows, the RBI can prevent the money supply from growing too rapidly, which could lead to inflation. The RBI's sterilization operations also help to stabilize the exchange rate. Okay, so basically two things will be influenced here, exchange rate and inflation. Okay, now the question comes, the last question that comes in the mind is that what does RBI do with the dollars? Okay, let's say RBI has dollars. So is it so very good to hold these dollars? Are they very dear to RBI? So it is not correct. Okay, RBI keeps on selling USD also in order to inject money into the market, inject rupees into the market. So it's not as it's generally shown that the great forex are very good or foreign reserves are very good. Okay, if there is so much of foreign reserve, then it will impact the market negatively. Okay, it will make rupees stronger or weaker depending upon the dynamics, and it will keep affecting the market in some way. So what is the main purpose of RBI or any government who knows their economy is to maintain a steady flow. A steady flow. Okay, between these two ultimates. Not very much, not very less. So this solves many concepts and many answers here. So this was today's lecture. In the next lecture, we'll talk about next question. Thank you very much for this lecture, and I hope you understood a lot. I'll see you in the next video. See you.